Aweh Millionaire. In today's video, I'm going to show you a simple Euro USD Forex trading strategy that I use to collect 25 pips on this buy trade on Euro USD in literally 2 hours, so that you too can trade like a smart trader, follow the smart money, and collect these easy pips. Let's get it.
Batman, Batman, Batman. Batman, Batman, Batman.
Now, why are we trading Euro USD? Well, the key thing here to trading with the smart money, okay, and applying a smart trader, smart money forex strategy, is you first need to understand where in the market the smart money is going to be playing in the game. And the key tool that we use here to know exactly with high probability when the banks are going to be playing in the game is our economic calendar on Forex Factory. Forex Factory tells you when there is high impact news, and again, whenever there is high impact news, we know that with high probability the smart money, the banks, are going to be playing in the game. And as you see today, on the 16th of July 2020, we had high impact news on the euro, 1:45 p.m. okay, there was this main whatever referencing rate and all this monetary policies, whatever it is, who cares? Okay, the only thing you care about is when are the banks stepping into the market and which currency should I be focusing on. And this is why euro was the currency of the day. So I took the euro, I paired it against the dollar, and I simply analyzed the charts like a smart trader to look for easy trade setups using this simple smart trader strategy. And the name of the game when it comes to trading like the smart trader is supply and demand. You want to identify these high probability interest levels that the banks are paying attention to, so that you too as a smart trader can do the same thing. Okay, and that's what I did right here. I'm on the 15-minute time frame where I've got my demand level over here. I have another demand level down here, a supply level, and another supply level up here. And this is an easy 4-step process where you need to identify exactly where the banks are focusing on. So if I go to the 4-hour time frame, and this is for my people that have the free video training of how to identify these levels. Okay, so here we have a supply level on the 15th of July, we have the demand level around the 14th of July, another demand level on the 13th of July. This is on the 4-hour time frame, so you know exactly where I spotted these levels. And again, I'm using the FX volume to help me to identify exactly what the hell is going on. And I have another supply level all the way on the 9th of, well, somewhere around March. So you identify these possible supply and demand levels on the 4-hour time frame, and then you go to the 15-minute time frame to spot and draw the horizontal lines for your supply and your demand levels. So if I look at this first supply level, which I have here all the way in March, if I go to the 15-minute time frame, and again, this is for those that have my free video training, so you can understand exactly how I identified this level. If I go to my 15-minute time frame on Euro USD, it only takes me as far back as the 5th of May. So in this case, I need to go to the lowest possible time frame, okay, or above the 15-minute time frame. That's going to help me to spot the supply level. So if I switch to M30, okay, now that I'm on M30, I can go all the way back to March, which is where that supply level is, and then I'm going to use the Forex volume from the 30-minute time frame to help me to identify where the supply level is, which is boom right here on the 9th of March. Again, we're using the high volume, the FX volume, to help us to identify the supply level. And then back to the 15-minute chart to identify those other levels that I have all the way in July. Okay, the first demand level that I have over there, if I can just zoom in for you guys so that you can see exactly what I'm talking about. Boom, 13th of July, high volume, demand zone, nice and easy, no two ways about it. Okay, and another demand level over there on the 14th of July. Same thing, FX volume, boom, nice and easy. We know where the smart money is at. Okay, we know what the smart money is thinking. We got you. We got the banks. We know what you're doing. And then we have another supply level on the 15th of July. Skibbity pap, boom, right over there. Demand level, nice and easy. Now, if you don't know what I'm talking about and you want to know what I'm talking about, because what I'm talking about is some smart trader shit, then I suggest you click the link in the description and get your hands on the free video training that shows you to identify the supply and demand levels in 4 easy steps like a smart trader. But once that is done, and that literally is the hardest work of the simple strategy, is identifying these levels. And once you got that, we stay on the 15-minute time frame, and we now simply analyze what the banks are thinking, and number 2, what the dumbass traders are thinking, so that we know as a smart trader what we need to be doing. Okay, this is a smart trader strategy. This is how we trade with the banks with high probability. So what we have here is on the 15th of July, price came off the supply level which we identified, and then pushed all the way down to where? To our demand level which we identified from the 14th of July. Okay, all of this is done before the news is even released. Okay, so we already know, okay, the banks are trying to manipulate the traders to take the opposite side of the trade, but the smart traders like, no, we know exactly what you're doing. Okay, we're coming from the back door. Okay, we're coming to steal the pips in the bank here. Okay, we're like bank robbers with this strategy, trying to take these pips that the banks are trying to be stingy with us. So we know that the price is coming off a supply level and is coming to test a demand level from the 14th of July before the high impact news is released. So before this main referencing rate nonsense was released, we already knew what the smart money was thinking. Okay, and obviously because we know what the smart money is thinking, where the smart money is, we also know what the dumbass traders are thinking. Okay, the dumbass traders see that price is being pushed down for the day. They want to be selling, which is exactly what the banks want to do. They want the dumb retail traders to take the opposite side of the trade, and they induce the retail traders to make these senile decisions. Okay, but you're a smart trader, you don't do that shit. You know what the banks are doing. So price is pushed down to a demand level. When price is testing a demand level, you want to be buying because you want to buy with the banks. Nice and simple. And once you know that you want to be buying, okay, all you need to do now is execute your order, and you use your most recent fractal high and your most recent fractal low for your entry and your stop loss on this strategy. So most recent fractal high all the way up there when it tested the demand level, and then our most recent fractal low all the way down there, which is also outside the demand level. Nice and easy, nice and simple, nice and textbook. Okay, this is a textbook smart trader strategy trade. And then TP according to your reward to risk ratio, and then skibbity pap. Once the news was released, the banks did their thing, hit the stop losses of the dumb traders and hit the TP of the smart trader. And that's how it's done. Trade like a smart trader, follow the smart money. I'm out. Aweh, Millionaire. If you enjoyed the video, leave a like, comment, and subscribe, and hit that bell.
Batman, Batman, Batman.